In today's episode, we're going to talk about stock ticker VFS, a small Vietnamese electric vehicle company that is currently operating at a loss and whose founder made $60 billion overnight. That's right. This company IPO'd on the Nasdaq last week and hit a low of about $11 a share. The founder owns 2.3 billion shares, and today the stock went up to over $40 a share, an increase for him of over $60 billion overnight. Well, that sure makes my trade seem very small, but I day traded it. And knowing the ownership structure actually gave me a little bit more confidence to trade this stock to the upside as it was squeezing from 18 to 20 to 25 to 30, 35 to 40, all the way up to $46 a share. And we're gonna break it down in today's recap. All right, so let's get started by looking at the 5-minute chart of VFS today. So this is our 5-minute chart for today. And this is going to show you some really clean pullback opportunities. This first bull flag right here. So you have 4 green candles, 3 red candles. What happens when the first candle makes a new high? That right there is a possible entry. That is a really nice resolution, which in this case gave us a move all the way up to $24, $25 a share. It pulls back again, gives you a couple candles of pullback, and then what does it do next? Again, squeezes through the high. So this is a stock that actually responded very nicely to technical analysis. The cleanest setups were right here, and right here. This one, although I traded it, was not as clean because it pulled back a bit more. It then kind of gave a surprise pop up, followed by a red candle, followed by a double top where it hits this resistance right up here. And then it blew through that level and squeezed all the way up into a halt. Then it did a dip and rip on resumption, which was right here, and squeezed up to about $46 a share, just under 47. The high was $46.98. Wow, what a move. Now, I will say that I like to trade these on the front side of the move. I avoid the back side of the move. So all of this area here is fair game. From this point, not interested. Now, some people would be interested in trading this to the short side for a fade, maybe hoping for a fade back down towards the volume weighted average price, which is this orange line right here. That's fine. But what a lot of traders end up doing is they end up missing the beginning of the move or just kind of starting to trade it towards the tail end and then losing on one of these big rejections and then over trading the backside of the move to try to recoup those losses. And they end up losing more money, which is just a recipe for frustration. It's not the way to approach this. But let's talk about these first couple of patterns here. Why did these resolve so well? Something that you may have already learned, and I've talked about this in other episodes, is that bull flags, well, this is a bull flag, a very clean one. Bull flags do not always work. Sometimes they work really well, and then sometimes they don't work at all. So why was this a stock that they responded so nicely on? Why was this a stock worth trading? Well, this comes back to the fact that this was a recent IPO. And it's also an IPO with a relatively small float. So low float IPOs are some of the stocks that historically have made the biggest moves. So in my Warrior Pro classes, I of course teach about bull flags, flat top breakouts, ABCD patterns, all of the standard chart patterns. But I also talk about a few of the daily setups that add juice to any intraday setup. And so daily setups, daily chart patterns include recent reverse splits, recent SPACs, SPAC mergers, recent IPOs, blue sky setups. And this is actually an example of being both a blue sky setup and a recent IPO. And then we've also had some experience with stocks that are foreign listed or just foreign companies. This is a Vietnamese company. Chinese companies have been particularly volatile this year. So there's something to that. Now, in this particular example on VFS, we had our IPO day last week, August 15th. So how do I even know about stocks that are IPO? Well, number one, you can actually go, Nasdaq IPO calendar right here. And I keep this up and I have it up. I look at it all the time. It reminds me, of course, also about the football schedule and tells me to check out TD Ameritrade. But most importantly, really, the reason I go to this site is because it tells me about upcoming IPOs. So this is the Nasdaq IPO calendar. All right. So I check that periodically, but what's even more helpful is the scanners. So on the day of the actual IPO last week, the stock IPOs, and initially it pops up just like a smidge. You can see right here, it IPOs, it pops up just a smidge, and then it starts to pull back. All right. It pulls back and then it squeezes back up. And on that IPO day, this actually had some pretty serious range. However, it was difficult to trade on the IPO day because these candles were so big. You had light volume with big spreads. I think a lot of us were hopeful that going into day two, we would have continuation. But going into day two, it ended up just pulling back. So we really did not have continuation. And we can actually look at the entire chart history of this stock from when it first started trading. So initially you get that squeeze, then it starts to sell off, sell off, sell off. And yesterday was a small green day. Now, we actually were talking about it yesterday because I said it might be a good candidate for a first daily candle to make a new high over $19.68. That was yesterday. But what ended up happening yesterday is it didn't make that new high. We had a small green candle, but it did not cross the trigger, which would have been confirmation. 1968. First candle to make a new high. There's something psychological about that. It's a stock that's going from stair-stepping lower, red candles, to the first candle making a new high. That's the tide beginning to shift. And that's when we often see a lot of buyers come in. And we sure saw it today. Much more than I expected. So this morning, I'd have to scroll all the way back here. It might take a little while. But early this morning, this hit my scanner as it popped up to, I think it was $18.50. It was right here on this candle. So this was where I first saw it, right there. The nice thing about having stock scanners is that they help you find stocks that are moving. Now, different people use different methods of finding stocks to trade. Some people just be in, on Twitter or YouTube or, chat rooms, things like that. But in any case, these scanners alerted me that the stock was moving up. And so from that point forward, I was watching it and I was interested in it. We can look at the chart patterns and we will do that in just a moment. I'll get the 1 minute chart up so we can get that dialed in. But before we do, let's look at the ownership structure on this. So I go over to BAM SEC and I pull up the ticker and VinFast Auto. This is a Vietnamese company, so we know that. We could scroll down here just a little bit. This will tell us some different things about the company. VinFast is a growth stage company with a history of losses, negative cash flows from operating activities, and negative working capital. It expects to require significant additional capital, which it expects to fund through additional debt and equity financing. So, they're putting these things right out there. This is the thing that companies will do. They have to be transparent. So they put these things out there in their filings for investors to read. Now, as a day trader, we don't always necessarily read all of these filings because my average trades are only about 5 minutes long. So given my average hold time is about 5 minutes, it doesn't really make sense to spend hours and hours reading about, all of the fundamentals of a company. I can pull up my my metrics for you here. These are not up to date with the last few trading sessions, but this is right here. So a little over $12 million, over 23,000 trades, 69% accuracy, average hold time 5 minutes, right? So this is years and years of trading data. So given that I have relatively short hold times, I don't usually spend a lot of time looking through this. But for IPOs and for recent reverse splits, I like to check to see what the number of shares are. So if we look at this, the thing that is true with a lot of these companies is that they have the number of shares that are available to trade, and then there's the number of shares that are held by insiders. So they don't always, well, typically they won't. If they allowed all of the shares to be available to trade, then someone could do a hostile takeover. they buy up enough shares on the open market to be a 51% owner, and now they're doing a takeover. If there's only 10% of all of the equity of the company available on the stock market, you would never be able to do a hostile takeover. So in the case of this particular stock, what's interesting is that the founder right here, he owns just under 2.3 billion shares. So I did the math real quick. Google helped me out. 2.3 billion shares times $37 a share, which is the current price, is $85 billion. Now, when it hit a high of 46.98, he owned $108 billion of stock. Now, the reality is, it's a paper net worth because, oh, and by the way, those are my trades on VFS. So this is a paper net worth because realistically, if he wanted to sell those shares, well, how much volume? There's only today like 19 million shares of volume. There's certainly not 2.3 billion shares of volume. So it's a little bit deceptive because the fact is, even if he wanted to sell all of those shares, he wouldn't be able to. But in any case, on paper, his net worth really went up big time overnight. So that's something that's interesting with this company. The fact that you've got essentially all of the shares consolidated with one person, and the fact that realistically, they're not going to be able to sell them easily on the open market because they have so many. And the fact that the actual available number of shares to trade is quite low. So you end up having a float that's pretty locked up. And that creates float rotation, and that can create these really big exaggerated moves. So on VFS, if we go on to the 1 minute chart, I'll say that we've been in a pretty cold market. So initially I was like, I don't know, guys, it was really hard for me to get interested in this because you pull it up, it's got light volume, you've got big spreads. It initially pops up right here from 18 up to a high of 1946. So, you could have traded it right here. There was a trade on the break of 19. I saw some traders mention that they took that trade, little scalp trade. It goes a little higher, it pulls back. At the open, it did a red to green. Went red, goes green, and squeezes up again to about 1979. Not a crazy move. It pulls back, but then when it broke that level, that was our first move that was really pretty clean. It squeezes up to a high of 21. Goes up to 21.50, and in this area, we were forming our first 5 minute pullback. So remember, this is a 1 minute chart. So on the 5 minute chart, every 5 candles creates one 5 minute candle. So, approximately here, and then first candle to make a new high was right here. This surprised me because on this candle right here, we actually went below the volume weighted average price. And I thought, as it held here, I was like, okay, we're good. And then it dropped here and I thought, no, we're not good. And then it ripped right back up. And I think it might have caught maybe some short sellers a little off guard there. It just was a funny spot. But it caught long traders off guard too. Some long traders chased it over 22, got the squeeze up to 23. This was tough on a 1 minute pullback because it popped higher, dropped down, and then it went. Another micro pullback right here, but then this pullback was even cleaner because this one didn't go below VWAP. It was a nice steady channel down. It breaks to the upside, it goes back up. You get a nice 1 minute pullback right here, and it continued higher. The next pullback was right there. And then this final one at 31 was right here before it squeezed up to a high of 34. This at that point, I thought was the top of the move. I was like, okay, I think that's the top because here we pulled back a bit more than I'd like. We then came back up, and in hindsight, this really was a cup and a handle formation right here. It's not perfect, but they're not always perfect. And the fact is, this had enough things going for it that it was worth taking these trades. So for me, all of my trades were relatively quick scalp trades, getting in at a $0.50, taking profit as it squeezed through the next level, getting back in at the next $0.50, whole dollar, taking profit, it went up to the next level. It went up to a halt at 41.52. When it opened, it dipped down. I bought on that resumption right down here. It squeezed up there almost immediately to 47, which was nice. But I took that position with small size. So not a big winner. And that marked the top. These two candles right here, the big green candle followed by the big red candle, that is it looks a little bit like a middle finger, right? So, it's kind of it's the indicator, and it's right there. It's very clear. And that, in fact, was the high a day going into basically 12 noon. So, in hindsight, I felt a little frustrated in some ways that I didn't size up on this in a bigger way. I was trading with small size the whole time. But the reason was the liquidity was not great early on. Even right now, if we look at the spreads, they're 20 cents, 15 cents, 30 cents. The spread being the difference between the bid price and the ask price. That's a 50-cent spread right there. And the thing is, the spreads weren't any better this morning. They were 50-cent, 70-cent spread. I think when it first hit 18, it was like, I don't know, maybe it was 18.80 on the ask and like 18.12 on the bid. So it was like a 70-cent spread. And that's a tough spot to step in with like a 5,000 share order. All of a sudden you're unrealized negative 80 cents a share. Now, 500 share order is fine, but that's what I ended up doing. Smaller orders. So, kind of just chipped away with some small trades on it. I also had a trade with 250 shares where I lost 2 points. So I lost $500 with 250 shares. And I was like, man, that does wipe out a couple of those small little base hits. And that is one of the downsides of being a breakout momentum trader. Buy high, sell higher, buy high, sell higher. The problem is that you'll have lots of small winners, and then you end up catching this one loss, and it kind of wipes you out. So I've been pretty conservative these last 2 weeks or so. I've been feeling like the market was a little colder. We did have VFS last Tuesday. We also had another IPO last Tuesday, but otherwise last week was really cold. Tuesday was my best day of the week. I think I finished up 6,000 last Tuesday. But today I wasn't able to produce that level of profit because I didn't feel comfortable with the share size. And then by the time it proved itself, I was like, I can't take big share size up here. It's too extended. So right now, my own trading is a little bit on the defense. I'm not feeling really aggressive. I'm not pushing it really hard. I'm being a bit conservative. But what's really important for me and myself as a trader is consistency. Trying to be consistent and, minimizing loss and minimizing my risk. So that comes at a cost of losing some of the upside potential. But I always say I'm okay with losing upside potential if I'm minimizing downside risk. Because if I had punched this for, 5,000 shares or something like that, or even scaled into 5,000 shares, there were a number of moments where I saw it go up, and you even see it right here, where it goes up and down 50, 75 cents a share on very, very light volume. So and this is a blessing and a curse. On the one hand, it's good because when these stocks really start to squeeze, short sellers who might have accumulated big positions at a lower price are now going to struggle to cover when the prices are higher. And if they get forced to cover by their broker, they could incur a lot of slippage, and that could actually create a true short squeeze where it's just rapid short covering, which creates almost parabolic straight up price action. We had something like that on VTGN not that long ago. So at the end of this episode, I'll put a link to the VTGN video. This is a stock that went pre-market from $2 to $60 a share. It was insane. And there's no question that there were some short sellers that got liquidated on that squeeze. I mean, it was pretty bananas, but in any case, you never know when that might happen. So on VFS, I just unfortunately wasn't able to get confident punching those big orders. I was too concerned about slippage, and I was trying to minimize my downside. So, this is just part of the deal with trading through what's mostly right now a colder market. one of the things that's tough with when it's cold is that you get these moments where there's something moving, but you're like a little gun shy and you don't fully maximize on it. Anyways, green is good. My $2,000 pales in comparison to the $60 billion that the founder made overnight, at least in paper value. I don't know if he's going to find somebody that would be willing to loan him money and take his shares on collateral, but that might be his best chance of getting a little bit of money, because the fact is it would be hard to sell those shares on the open market, and it would probably be hard to sell those shares to a sophisticated investor who would not value this company as highly as the market is currently valuing it. So we do have a little bit of a divergence between probably the true value of the company and the current trading price, but these are opportunities that traders like myself can capitalize on. So I hope you found this episode interesting. As always, I hope you subscribe to the channel. I hope you hit the thumbs up, share the episode with a couple of your friends, and make sure you check out the next episode that I'll put a link to at the end on VTGN. And if you want to see an episode where I was really crushing it, you can watch me make $185,000 in 3 hours trading GameStop. That was a pretty crazy day. I guess this is a good moment to remind you that my results are not typical. I've been trading for a long time, so I encourage you to manage your risk and practice in a simulator before you put real money on the line, and take it slow. I'll see you guys back here for the next episode first thing tomorrow morning. You have helped make this one of the most popular channels for day traders. I upload new episodes every single week, so make sure you hit that subscribe button with the alert bell. That way you'll get the notification when the new episode goes live.